Chainlink Daily Update for Wednesday, September 24th. In this video, we're going to look at the daily chart and the 3-day chart. So on Monday, we looked at the weekly. Yesterday, we looked at the shorter time frame, 4-hour. We'll do the kind of the middle of that and look for what we would kind of want to see happen, over the next several days to maybe even a couple of weeks. So if you like the video, give us a thumbs up. If you want more help navigating the cycle, want more help with entries and exits, requests, more educational content, consider subscribing through Patreon. Love to help you out there. All right, daily chart. So after the move down, now this has been a pretty rapid fall down here. Almost 20% inside of 3 days here, yeah? Okay, above average sell volume here. At the same time, that's really our biggest volatility. We'll look more at this at the 3-day, but you can see how it really swept out all the lows, even after this move up here, right? The low wick, the low close was right here. It swept all of that. Maybe liquidating all the longs, right? A lot of people will put stop losses just under here, right? I mean, maybe that's just the cascade effect of that. We tagged the 100 EMA, this blue line, which is maybe coincidentally or not, where we last bounced. Again, we'll look more of this at the 3-day, maybe get it into better focus. So today, trying to find our balance here. That's typical after a kind of a relatively sharp correction, sell-off, or a big price spike. Typical is you're going to kind of try to consolidate and digest that move. So on the daily chart, down a bit, almost 20% in 3 days, right? The likelihood of sideways or, some relative chop between, the lows 22 to, the low close back here, right? The previous low close. So the odds would be like we kind of stay in here for a few more days. Something like that. Before we're making our, maybe not that quite that long, but we're looking at, here's the weekly close, the new week here. Something over the next several days, something in that area. So what patterns would we want to look out for the bulls to kind of reverse and take back over? I'm glad you asked. So let's take a pictured look here. So after the move down here, right, one bullish pattern would be like an inverse tower top where we kind of just go sideways and then we kind of reverse that here. So we'll have relatively flat candles, just like we're seeing today and yesterday, kind of go across. There's going to be a little bit of volatility in here, but more or less, 3 to 4 candles is about all we need. I don't see one back here, but you can just look up tower top and the inverse of that, right? And we'd want to see, you see this big wall here. We'd have to see something relatively equal to that side, get us back over all these moving averages. Somewhere around 23, 23.50, something like that would be perfectly well. Now that would be probably towards the weekly close, Saturday, Sunday. If it hasn't happened by then, we can probably start to eliminate a tower top reversal, right? And if you're wondering why is it called a tower top, well, right, if you draw it regularly, sometimes you'll see this. Some people call that the Bart Simpson pattern. It's all right. There's proper names and meme names, I guess. So that would be an inverse tower top, right? Come back up here. Or what we'd want to see is, and my preference is a more bullish pattern, even though it doesn't look like it, right? It's not going to look like a very bullish, but this is actually what I'd prefer to see for a bigger kind of move is what we call like a falling channel. So we have this move down, right? And then we'd see a continuation slightly lower, nothing crazy, but like maybe reverse back down, just a slow bleed out between now and say Monday, Tuesday, where all these candles just continue to slightly drop. This would be a pretty big launch off of here in my book. So one of those two is kind of where we look to recapture, or we're running out of time for today, depending on when you watch this. The unlikely event, right? This is set up still really good, but we're losing time. Is a kind of down consolidation, a doji candle, and then an instant reversal. That's like the most bullish, right? That would just be this trap down here and a fake out. It doesn't look like it's going to do that, but I mean, we could somehow Chainlink could get it together and close above 23.50 today. Maybe even tomorrow, right? It'd still be that kind of the tower, the inverse tower there, right? So we're looking for one of those. Volume's kind of been tapering off here in this downtrend, right? If you just look at the overall trend here, since late August, almost a month now, right, to the day, volume's been tapering off, which declining price, declining volume is bullish. Eventually, usually more than not. So we'll see if we can get that. Maybe even the next, right? We're looking at 2, 3, 4 days out. Okay, so now let's go to our 3-day. And we can see now we have some, again, a little bit more volatility here. But we want to look for similarities on this move versus last move. Okay, last move on our drawdown, we went right to the 21 EMA after wicking off the EMA 34 and the 100, right? That was all right in there, and the 50. They were all kind of clustered there. But we closed above the 21 and then saw a bounce. This one was pretty immediate. It could take a couple candles, and you can still rhyme with this. Now we're on a 3-day chart, so a couple candles, right? We're knocking on a week there. But look at what we're doing. We wicked down to the EMA 34, the orange line, trying to close back above the 21 EMA, the yellow line. Currently, it's at 21.92 as of today, and today is when this 3-day candle closes. So this is why we're looking at it. So in 5 hours, depending on when you watch this, maybe you already know, did we close above 21.92? If so, maybe we can anticipate in the next 3 to 6 days, 1 to 2 candles, a bigger bounce, right? Or at least a reversion back to kind of range highs, somewhere $25, $27 area. Then we'll see how we look at that point. Okay, what else? Well, let's look at the last time we really kind of bottomed out here. Apologies. Back in this area, right? Why are we looking at this? Well, see the volume here? The blue line is the average. So like I've mentioned before, we've sold off 20% in the past 2 candles here, right? 5, really been about 3 days. But then we've bounced back. But look at the volume. Much less than, half of normal volume. Okay, great. A 20% drawdown when half of the volume is there. Okay, that's a good sign. Right? What you wouldn't want to see is a giant red candle here and a 20% fall down. That can continue. So you want to be watching for that. But we haven't really seen that, really all year. But what we have seen is well above average buy volume. That's a good sign, right? People accumulating. But looking back here, look at this hammer candle at the bottom of a drawdown, right? After trying to find our footing. And then you get this move where you kind of retrace the lows, sweep the lows again. And then you close at a hammer candle. High probability of continuation higher after that and a reversal. And we got that. But what's more important is this drawdown again. Looking at this, we got, you guessed it, about 20, 25% drawdown there and just a handful of candles with pretty much averaging less than average volume. And then you get a nice bullish candle followed through above average volume, right? All this contextually makes sense, right? The piece of the puzzle. You want to relate all these. You have to always know where you are, right? The context has meaning, right? Just because you're getting volume in the middle of a trend is almost meaningless. Volume to end a trend, start a trend, more impactful. But, we don't have to worry about that until you're on like the weekly and monthly charts. For macro trends, I would suggest sticking to weekly and macro monthly charts. Unless you have, 5 years plus experience, then you can zoom into like the daily and the 4-hour. But for most people, you'll do yourself a big favor by sticking to higher time frames and making only a handful of trades per year. Maybe you relate to this, like if you overtrade, how well does that go? I would bet not so great. The more trades, usually the more loss. Maybe you can know from experience here. All right, that's the 3-day. If you want to check the parabolic SAR, right? We've actually triggered a downtrend as of this move, but a 20% move down kind of tends to trigger that. I don't really recommend using the SAR anything less than kind of the weekly. The weekly and monthly is good for this because you can see a lot more fake outs, right? There's 3 dots there, there's 2 dots here, right? If they're above, right, just a quick Cliff's notes here. Uptrend if the dots are below, right? And they're rising because price is rising, right? Downtrend triggers if the dots are above. You guessed it. All right, so handy to kind of look at, but only on higher time frames. What else do we see? Well, you can check the Gaussian channel on the 3-day. We're above it. Let's check it on the daily. We didn't do that yet. Right at the median line, so we kind of need to hold our footing here. We closed yesterday kind of right on it. We didn't touch it back here. Bounced off the top of the channel, so we're kind of on some thin ice here. What we're going to do for the next several days. Not a huge deal if we come down here. It's just a little bit more loss of momentum. You can see our 200-day EMA right down here, 1870. Then we have our 600-day down at 1634. I do not anticipate really hitting either of those. As I've said in previous videos, I think my worst case scenario, and we've been saying this for weeks, and we look where we just wicked to 2 days ago, right? In all my previous videos, this is probably about the worst case scenario, somewhere around $19.50 to $20 area. Well, 2 days ago, we hit a low wick of 2024. It might be all it takes. Or, like as we mentioned earlier in the beginning of the video, like that kind of falling channel, maybe a tower top, we get some more volatility. Maybe we tag this again. No big deal. Only reason to get a little bit more spooked is if we start to close like multiple days under the Gaussian channel, under 1950. Otherwise, this is all just smoke and mirrors, trying to shake out your little lettuce hands. You know, if you're in Chainlink, like you got to have a long-term outlook here. Like we're not looking at. Why are we looking at 4-hour charts? I don't know. You guys want it. That's fine. But if you're in these, you know, Chainlink, Ethereum, Solana, the top 10 coins, like you've got to have, in my opinion, like multi-year, maybe multi-decade outlooks. Forget these swing trading, these blue chips. Are you trying to swing trade Amazon and, you know, Microsoft? Well, maybe not Microsoft, but you know, Amazon, Tesla, okay, Netflix, the big hitters. Those are long-term trades. You're trying to swing trade Tesla? Get out of here. All right. So that's kind of my soapbox moment for the day. I'll get down off of that. And well, I guess we'll get to quote and card of the day, and we'll see you right back here tomorrow because daily updates. Hello. Don't look yet. I hit the wrong tab. The science, the quote of the day. The science of today is the technology of tomorrow. Sounds like a Disney quote or something. Tomorrowland. Space Mountain. Feel like that's somewhere in there. All right, card of the day. Lamborghini Aventador SVJ. So this is the high-end Aventador. Probably worth it. But I don't know what 2 mil. Knocking on the door, 5 years old at 2 mil. This has got to have a couple extra specs on it. $1 million. You can find an SVJ for under $1 million now. So I don't know what the rarity is on this one. The color is definitely an option. The yellow Parsifae, I forget what they call it. It's Parsifae something. But that, I don't feel like that's factory either. That's from the Performante, which is from the, what do they call them? Huracans? Huracan Performante. I don't know if I've ever seen the Performante on an Aventador, but here we are. Maybe added that. See what else we got. It is the you know, the Spider version, the drop top. Maybe they all are. Not an expert on SVJs. I'm pretty well versed in most Lambo stuff, but they're just so rare. I kind of stopped paying attention to them. I'll never get one. They're just overpriced in my book. Now, if you can pick, you know, the MSRP on these, I think was like 500K, maybe less than that when they came out. And look, don't let anyone ever convince you that supercars are a bad investment. Those are poor people talking. If you have the money, you can just park them in these, and not only can you not lose the money, you can actually like drive supercars if you do it correctly, like for free essentially, because you could sell it for what you bought it for or more. Here's a pretty good example of that, right? Even if you pay double MSRP for this, you still make a 2x on it, right? Now, again, I don't know if this one's really worth that. 2 million seems a little steep. But yeah, you can't actually make money or drive supercars for free. The only catch is you have to have the initial down payment, really, or initial cash payment. That's the only downside. And also not buying stupid. You never buy this. You're gonna lose money on this, bud. If you're buying for $2 million, this guy did not pay that. I bet you that much. So we could start a whole nother channel on just supercar talk. Probably should have done that to begin with. My channel is not growing. So there's that. Rants over. I'll stop it. Carbon ceramic brakes. Holy shit. Look at the size of that. That's bigger than something. Whatever. All right. Wrap it up there. The room's still blue. The neon's still on. We're still bullish on Chainlink. We'll make once we make new fresh highs, we'll get into all the speculation mode again. It'll be fun. Fun times. Just ahead. Q4 is going to be great.